Ladies and gentlemen of the crypto space, we're live on a Friday, July 19th at 11:36 a.m. I figured I'd go on a post that I did last night, way too late, on the concept of a CELOC. It's a HELOC. Haven't heard of a HELOC? You might be young, you're in your 20s, maybe not a homeowner. I don't know. There's a variety of reasons why persons have never ever heard of a HELOC, but broadly speaking, if you're in the crypto space and you learn in finance back asswards, you know of it. You know how to get crypto credit. The thing is, the vast majority of the world isn't looking at the world from the crypto space perspective. It's just that a lot of people were young and they gained exposure to the world of finance vis-a-vis the crypto markets. That is the not the That's not normal. That's back asswards. The whole world out there, 99.9% of people, are looking at the crypto space from the outside in. Now, I myself learned the good part of finance from looking at the outside world from the crypto space out. So I learned backwards as well. But what's important to understand is so much you have to get outside of your head. To navigate capital management, financial markets, you have to look at things the way the rest of the world does. And then you have to realize why they're so wrong. And then you could clearly come to the conclusion that that's unfortunate. Try and help. You all could set up streams like I do. I talk to you guys because from my understanding purposes primarily, but I also have quite the interest in explaining what I see in the global financial system and then looking at the crypto space from the outside in and also from the inside out. Things that I've learned over the years. You know the deal. It's my journal, guys. Okay, so the vast majority of the world understands what a HELOC is. Let's just say that. They have a house, they own a house, they have a title, which is just a piece of fucking paper that's registered with the local tax authority that says you own this piece of property and you got to pay taxes on it. That sounds pretty shitty, doesn't it? But that's the way the world works. So what can you do with this piece of paper? Basically, nowadays you have to call up and make an appointment, but you walk into a bank and you say, "Hi, I'm here for a HELOC." And you're like, "Hi, I got my title." And they're like, "Oh, you got your title? Cool." Then they probably ask how much you want. I've never gotten a HELOC because it's stupid. But the whole world loves them. They use them. They operate on them. And it's not just personal. It's also commercial pieces of property. You own a factory or a warehouse or a storage facility. You could get a line of credit against the property that you own. It's a title paper. It's a certificate that you own it. It's um, you'll see. I'll get to my example, my very sophisticated example of a CELOC that uh, that explains what a HELOC is. It's the same exact thing mechanically. There's no difference. Anywho, we're looking at the Bitcoin chart and this shit looks hot. That's a crazy ass chart. No one's showing this particular chart, but then again, that's why I have to show it, post it. People don't see what I see. But I sure as hell see this. That's just crazy. All right, so a CELOC is a HELOC, no difference. And what's a CELOC? Oh, we know this page. This is Aave. What do they offer? They offer CELOCs, which is a HELOC. They offer crypto equity lines of credit. It doesn't have to have the name, the title, the acronym. That's what it is. So I'm going to tell you in crypto terms what a person does in the real world. So I own a commercial piece of property. I own a pizza shop, let's say, and I want a line of credit to facilitate business operations because I get payouts on a weekly basis. I'm able to run my accounting books, let's say, on a weekly basis or bi-weekly basis. So you have your receipts, your accounts receivables, and let's say the business makes like 10, 20 grand every 2 weeks. So you want HELOC or a line of credit, an equity-driven line of credit from a bank for 200 grand. And the bank's like, all right, you make 20 grand every 2 weeks. Here's a $200,000 line of credit. So how do you do that? If that's a real world example, and how do you do that in the crypto market? How do you get a CELOC, which is a crypto equity line of credit? You go there, you go there, and you go here. Unlocking. And you go here, and you go here, and you do that. Okay. How long did that take in the real world to walk into a bank and get a home equity line of credit with an underwriter and all of that corporate bullshit we know exists in traditional finance? A month for them to cross their T's and dot their I's and make sure there's no other debt against your collateral, or just to make sure that you can actually pay and looking over your accounts receivables for your business, your bank statements. Um, a month, 2 months, boom, done. That's a crypto equity line of credit, a CELOC. Now, there's obviously endless places to get a CELOC from. You go over to Curve as well. These are CELOCs, but of a different nature. It's a different product, but no different. This is your collateral, and now you can borrow 20 bucks. Okay, great. Let's do that. Yay! How cool is that? It took like 20 seconds between the two transactions to get a crypto equity line of credit. Ain't that some shit? It's just that the general public doesn't see it. They don't understand it. A good part of the general public doesn't understand HELOCs. That's how traditional finance operates, though, especially business. And there's a crypto equity line of credit done. Now, obviously, you scale this up, running a business, and this facilitates business operations. Now, obviously, this isn't like if you own the well, maybe it is in some regards. So you have equity in your property, but the property doesn't make money, but the business operating on the property clearly does have cash flow. But in this instance, this is just a component of the balance sheet, as Michael Saylor talks about. You have to compose your balance sheet of something. So if you need access to working capital, you're able to access it vis-a-vis the composition of your balance sheet. Obviously, the balance sheet needs to consist of cash flow positive business activity. Otherwise, how the hell are you going to pay that $20 off? And that is the chicken and the egg that I've talked about for quite some time. A successful business is an actual cash flow positive business. You're running a pizza shop, running a Walmart, you're running a Target, whatever the hell you could possibly think of. Uh, the business makes cash flow. So if you're creating a business for yourself, I don't know which comes first. There's chicken and the egg. That's the whole point. You own businesses that produce cash flow, and you compose the balance sheet with collateralizable assets, which I define as cash or a cash equivalent. So you investable cash, stable coins, or collateralizable cash, which is in the crypto space the hardest cash, as some would call it, is like a Bitcoin or an Ethereum. Now, that'd be nice if like Solana was available to an Aave, a consolidated Aave user interface. I don't know how they would do that, but that'd be interesting. But fortunately, there's WBTC, so they've brought Bitcoin as a collateralizable instrument, a collateralizable balance sheet component over to the Ethereum network. So you have a consolidated user interface that can accept Bitcoin denomination and Ethereum denomination as balance sheet components, and the equity in those assets is accessible. Access working capital. And holistically, that is a business. Collateral, cash flow. There is no difference between that, doing that, structuring like that in crypto markets as compared to a chain of pizza shops. Structurally, it's identical. I mean, technically, folks are so critical. They're like, "What's the utility? Utility token? Gotta have utility." You need to define it at least. You can't just be like, "Oh, it needs utility." What's the utility? So the products and services of a pizza shop are clearly food, pizza pies, uh, chicken rolls, uh, pick another item in a pizza shop, spaghetti. And the products in crypto markets are credit, foreign exchange, and derivatives. Fintech. The reason why they label it utility is because it's such a crypto-centric term. And also because most, even in the crypto markets, maybe especially in the crypto markets, don't understand um, real world banking. It's because these types of products are not accessible to the majority of people, or people don't know that they even exist, like home equity line of credit or foreign exchange markets. I mean, how many people are forex traders, or how many people do options trading? I guess that's more popular nowadays, but that's a derivative product. But credit, I mean, folks have credit cards, but they call it a credit card, so they don't understand that that's a financial product. A product just like a slice of pizza in a pizza shop. So fintech businesses, FX, credit, derivatives are the same as a calzone, a chicken roll, and a pizza pie in a pizza shop. It's financial products. So we just described how you have businesses in these crypto markets, that these kids run around with meme coins, and I don't completely discount the significance of memes and culture and trends and so on and so forth and community, but there's actually real fucking business. It's real business. Talking about the damn pizza shop for years at this point. Oh my. So that's how you access a crypto equity line of credit. This is the most boring version of it, which is critical. There's a reason why it's the most boring and trusted, is because it's fucking obvious. And they were lend pre-2020, back in 2019, 18, 17. Oh, this has been going on a long time? This isn't new? This is old? Oh, this is crypto old stuff. This kind of concept is for the crypto boomers. The new stuff, the new fancy protocol, and some Solana meme coin is changing everything with its Ponzi-nomics. And it's tax and recycling pressure, or whatever catchphrases that we've talked about, or that's popular nowadays. At least understand this shit from a traditional financial perspective, because this is real. How else could I put it? It's components of a business. It's just that people don't see it as a business. But I describe it and define it as a business. And literally that's like, people call it like manifestation. But it's not even manifestation. This is really identification. I identify these things as businesses because mechanically and structurally they are. A protocol, sure, but it's a business. What does it mean to be a business? Do you need to have an incorporation, a business license, a little piece of paper on a wall that says, I'm a business? Or do you need to offer financial products and services and actually be a business? Do you need to be called a business, labeled a business to be a business? It's a business. No ifs, ands, or buts. So, you as an investor in these crypto markets own businesses. Now, if there's a difference between a shitty business and a hurting business and a good business, a mispriced business. And that's a lot of what we talk about. Shitty business is a business that has no product. Pretty shitty business. Yes, me. Not selling any products. I don't understand really why it's a good investment. When you're making an investment, you want to invest in a good business that has products and services that people want to use. That kind of makes sense. Now, a hurting business is a business that's under pressure from structural economic phenomena, but 10,000 people walk through the door a day, 100,000 people walk through the door a day. They're all using the product, and the business is making good revenue. There's plenty of hurting businesses, and there's good businesses like this. It's not. I've often said a good business, or it's not a good tech. It's like good tech, but a good business is not necessarily the best investment. You need to have an edge. So maybe a hurting business is actually a better investment because it's mispriced. It's still making all the revenue. Year over year revenue is like, whoa, it's a healthy business. But the general public doesn't see it. Of course, they don't see it. They don't talk about it in the terms that I do. So if a business is healthy and it's hurting, it's because it's mispriced. And that's literally the broad crypto space right now. It's just all mispriced. Everything's freaking mispriced. All of these things are the most insane fintech businesses in the planet because every country has companies and corporations, so on and so forth, and nobody sees this. So it is underappreciated. When it becomes appreciated, you see that in charts. Appreciation, they call it with regard to price appreciation, which is the business being appreciated. So you don't want to buy things when they're appreciated. You want to buy things when they're hurting. There's blood in the streets. Buy when there's blood in the streets. Sell when there's greed in the eye. These are all very traditional catchphrases that people use, but I just use them and describe them in a different way. You want to buy things when they're not appreciated. People appreciate the prices get appreciated, and people appreciate it. When people appreciate something, that basically means all people are hot on it. It's a terminology. Try and think about it in this kind of terminology. Because when everyone starts to appreciate an asset, like, oh my God, this is the next big fucking thing, then the price appreciates. So you want to appreciate something prior to everyone else appreciating it, because once everyone else appreciates it, the price appreciates. Hope that helps. That's a quick little thought, quick little story I had in my mind. If you're on X or YouTube, pop your comments in the thread and let's figure this shit out together. DCA Man's in the house. Iden, good morning. DA Advisor, good morning. Connect the dots, good morning. I have a question, Captain. All right. What do you think about using tools from the traditional finance world and applying them to DeFi? Of course, there's no difference between traditional financial world and DeFi. That separation is the fallacy. That separation doesn't exist. It's just the entire opening monologue to this stream. This is business. Business is business. APR is APR is APR. You might as well look at this crypto space in terms of real estate. You don't have to look about it in terms of a pizza shop, but you can look at it in terms of banking, because it is banking. So, of course, there's no difference between the tools of traditional finance and the tools of DeFi. The tools are the tools are the tools, just like APR is APR is APR. Hope that helps. An example would be P/E ratios, magic formula, intrinsic value. Well, a lot of that shit is stupid, even for traditional financial purposes. It's like trying to determine assess the intrinsic price point of an asset. P/E ratios are going up, up, and up as things nominally inflate. It's stupid. What is the price point? This is why I talk about cash flow and collateral. And this is why I say you're playing against yourself, which means buy a salary, buy more cash flow, buy more cash flow, buy more cash flow, buy more cash flow. Have your balance sheet consist of collateral so that you can borrow against it to buy more cash flow. And over the years, the collateral appreciates, which gives you more purchasing or more operating capital. You can buy larger investments that are mispriced. You got to buy things at a strategic time as a strict, prudent investor. And you do it over and over again. So you just follow the rules. Follow the rules, and in 4, 8, 12 years, everything just goes up, up, and up nominally. Everything else is noise. It's complete noise. But if you're talking about like trading and stuff, you know, P&E, magic formula, intrinsic value, you're trying to get into the psychological heads of other people to assess, oh, they're going to buy when they see this information. And that's like a capital gains type strategy. I completely dismiss capital gains at this point. I am not a PVP kind of guy. It's financial theft. It's, oh, I got in first, so I'm going to take your money. I mean, structurally, it's mechanically what that game is. It's basically a concentration of capital from the many to the few, and that's cool if you like trading and if that's something that folks want to do. Obviously, in good part, I am where I am because those are the types of thoughts I had in the early days of my activity in these markets. But I no longer wish to engage with markets like that. I wish to engage with markets as an investor. Trading is not investing. It's a completely different mindset. It's uh, uh, it's a primal mindset. It's a take what you can take. It's a get what you can get. It's a predatorial mindset. If you want to be a successful trader, you have to be a predator. You're not afraid to take from other people. And you could use all the data you want to get into the heads of other people to try and get in first. You get in when that meme coin is a mil market cap, and you get out when it's 30 mil market cap, and you get to take everyone's money. Haha, mine, mine, my precious. Just to hopefully that gives some clarity, some color to the thought that you're thinking of. So yes, all that stuff is applicable here, but it's not stuff I talk about anymore. I'm tired. I'm older than I was when I was younger. I'm in my 40s, but I just don't. I don't want that. I want something. I wanted something better. I wanted to tell a different story. I wanted to have a different mindset. I wanted to have a healthier mindset. I wanted to have a more sustainable mindset. I wanted to have a mindset that's just relaxing, passive, and I wanted it to be like an art. Structure a business, structure a portfolio, own cash flow, own collateral. Over the years, build your collateral, you invest opportunistically. That means you only invest when there's a damn good investment, like a really damn good investment. And that means you're not seeking investments. Sometimes the best investments are just right time, right place, right price. So you can't just sit in front of the computer screen day in, day out, like, oh, it's getting there. It's a good. You're not going to find it. Good investing is a slow process of just browsing and perusing, not forcing things. You can never force a good investment. The best investments are not forced. Hope that helps. Sergio present. James, Solend is the place you can get a CELOC for your Sol, no Ava yet on Solana, maybe tap on Solana soon. Yet Tapioca will be on Solana, it'll be on Beriche, it'll be everywhere. I mean, that's just insane. Sure, yes. So Solend and I know all the stuff that's on Solana. Solana is a robust ecosystem. um, the thing that comes to my mind is it's not consolidated. Like you still have this bifurcation of networks, but Solana is just still out there. It's still to a degree separated, even more so as compared to like the Cosmos networks. Even that's better integrated at this point than Solana. But Solana has wormholes, so you do have your, you have your Swift system between mainnet and Solana, your cross-country capital rails. Uh, Food for thought. Frankly, my mindset predominantly is in simplicity mode. So I'm like, I don't want to do shit over there and do shit over here. I want one user interface where I can manage everything. So that's really why, like, mainnet. But it's not even mainnet because it's way more than mainnet with the networks that you can access between Stargate and where Aave is deployed to and where Curve is deployed to, so on and so forth. So there's just so much activity across EVM and even Cosmos hubs, but EVM is kind of like the mature market compared to the emerging markets in the crypto space. So Solana still has some ways to go with regard to integrating into the crypto Swift system, so to speak. And so does the Cosmos hubs, so on and so forth. But EVMs, that shit is straight up first world right now. You do everything, operate a full business on the EVM networks. Trevor's in the house, much a pleasure. DCA man James, you can use Solid in USDO. Yeah, that's getting there. Yeah, it's gonna get freaking weird. How weird is that? I'm quite excited. I am looking forward to them releasing and seeing what it does because that whole seamless cross chain, that's just gonna be so weird. We saw glimpses of it with Stargate V1 and multi-chain before the implosion. This is talking back like mid 2021, and that's why I wrote those narratives at the end of 2021 for where things are heading. At some point, you're not going to know what chain you're operating on, and that's exactly what we have now with the way wallets work in many regards. If you go back to Aave and you go over to Base, uh, it's like boom, switch network, and boom. I don't really have anything over here, but if you put one, I have 35 cents. It's like boom, there you go, seamless. It's like boom, click it, and that's it. It's like click, 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 and you can do whatever you want on any chain, and it's not like you're fumbling between different wallets on a hardware wallet or fumbling in your browser extension to switch to a particular network to add a particular RPC. It's all there. It's all just works. And then you go over to Stargate and you're like, all right, I'm going to do a cross-border transfer today. We're going to go from Linnea to Arbitrum, site point 001, okay. And there's your wire transfer, your ETF, and it takes 30 seconds. Stargate V2 is wild. And there's just a lot more than just Stargate nowadays. You guys know the way I look at bridges. This stuff is cool, and Rubik is cool, and Thor Swap is cool, and all this stuff is just so cool. All these wire transfer protocols. It's a wire transfer. Ain't that some shit? Pepsi's in the house. Yo, what's up? How long do you think we will have a discount on Curve? I don't know. There's no way to answer stuff like that until the market appreciates it. And once the market appreciates it, the price point will appreciate as well. Things that are quite comforting is that nothing has changed with the business. Is it $1.9 billion? It's back over $2 billion. Billion. You're talking about a 28.7 cents asset, a couple hundred million market cap, 2 billion. If you, this has been out for a couple years. If you go to a small mom and pop shop down the block, to a pizza shop, or a local shop in a shopping center, that's a startup. It's a family or someone trying to be an entrepreneur, trying to create a business. This is a business. And this business, $2 billion walked through the door. It's a massive, monumental business. It's not appreciated, but I appreciate it. I don't need someone to tell me to appreciate it because I appreciate it because I understand it in traditional financial terms. It's a massive startup. Go over to Velodrome and Aerodrome and all that hype and hyperbole over there. They get a little too much for my taste. Those are massive businesses. And there's a lot of contention about them, but they're big businesses. Hundreds and hundreds of millions of dollars of deposits and Kingdom assets are insane as well. Ramsey's on Arbitrum. This is probably the most interesting flip. Oh, okay. Maybe it wasn't a flip. Maybe, I don't know, but that's the whole point. You need time to look at the data. Let's go over to optimism. Velodrome. Okay. These are interesting businesses. So, appreciate businesses before other people appreciate them. That's why we're looking at the Bitcoin chart where it's at 66. I've been waiting like 2 hours for it to punch through 66. This chart's nuts. People are rightfully afraid. You have the IT outage today, which is insane. You have Biden dropping out. You have Trump literally with an assassination attempt, and this doing what it's doing. You need to compartmentalize all these emotions and try and create a framework in your mind for how to manage the things that life throws at you, and all this information is life throwing shit at you, and only emotions are only part of the equation that govern your behavior. Logic and reason and peering through the bullshit makes all the difference. This is a disgustingly insane. I can't I can't express how insane this chart is. It's not the appreciation. It's this level. It already broke out. All that insanity, all that insanity we had back in 2021 and 2020. Remember the insanity, the mindset, the fever, all that money that was sloshing around and lines at Gucci and all the brands. Everyone's like, oh my God, stimmy check. I'm going to get my stimmy. Did you get your stimmy yet? And this is what the price of Bitcoin's doing. It flipped it. This is a flip of resistance, flip support on a time frame that matters. And no stupid 5 minute, 1 hour, 1 week, 1 day. And on a relatively trivial time frame, this is a monthly chart. That is insane. And to top it all off, it broke down and it just spacked right into 10 SMA and just blew right out. This chart is nutty. What does that mean? That basically means this is a great collateral. This is a collateral that doesn't want to depreciate. People are appreciating it. So I like using the word appreciate like that because people use it in terms of, oh, is your price appreciating? But it's also, do you appreciate things? That's really semantics. It's very important. This is a highly appreciated asset to create this kind of price action. People appreciate this asset for what it is, what it does. And what does it do? It's collateral. It's a collateral asset. You're not going into Target and paying with it, so it's not a settlement currency, but it's certainly a collateral. And the more people appreciate it, and that whole price point narrative and so on and so forth. But as a collateral asset, which is how I appreciate it, it's remarkably resilient in price point, and that's exactly what you want from a collateral asset. You want something that doesn't depreciate much, so you could comfortably and confidently access working capital with a CELOC, because if it depreciates too much and there's a lot of volatility in that regard, that you cannot acquire as great a line of credit. You have to be more conservative with regard to your line of credit's use because you don't want to jeopardize your collateral. Your collateral is an incredibly important component of business activity. Of course, we're all trying to do that, but time will proceed. So that's a very interesting mindset change. There's no rush. Yes, it'll be there. And if you think you're going to buy it before it appreciates, it doesn't matter. What matters is what do you do with your capital? When you work and you get a paycheck on a Friday, what do you do with the capital? So that's what I talk about with regard to business rules. What's your activity? Meaning, on a Friday, you get a paycheck, X amount goes here, X amount pays bills, X amount buys assets and invests and builds a business. That's it. That alone, that's your comfort zone. It's not, do you have enough? That's like FOMO and varying emotions. You're playing against yourself, and to play better against yourself, your measure of success is how well you could follow your business rules. And if you're following your business rules, that's the best you can do. So that's your measure of success. And by following your business rules, you're going to be fine in 4, 8, and 12 years because you built a business where you take your receipts from converting time into money and you're buying paychecks. And in 4, 8, 12 years, those paychecks that you've bought will eventually be more. And you want that number to go up. And then you could convert less time into money because you purchase paychecks and that's more of your receipts. There's the logic there. Hope that helps. DCA man, thanks for your thoughts. I was thinking about those tools to get more information to make better decisions. But yes, I really like the rational plan and I apply it to my portfolio. It's not just a plan to apply to the portfolio. It's a plan for mental health and well-being. There's no emotions in this. And that's why your measure of success needs to be just following the business rules. What are you? Write them down if you have to. You do this, this, and this when X, Y, and Z happens. And that needs to be the excitement. I was able to do this, this, and this when this, and this happened. And it's like an OCD person where A, B, and C, check, check, check. X, Y, Z, check, check, check. All right, let's start again. A, B, C, check, check, check. X, Y, Z, check, check, check. Let's start again. And that's the measure of success, just adhering to the rules. Write them down if you have to. It's not about, I'm not defining them for you. You need to define your own rules, that your goals. It has to come from you because that's the only way when you write them down and you define them that you could actually find satisfaction from them because you wrote them down, because you adhered to your rules. Therefore, you feel that gratification. That helps. I haven't tuned into Noah since Joe took Joe. That's a heck of a business. Trader Joe's a wild business. Avalanche and Mantle have been struggling. I don't think that means much in the long run. I just think, listen, if I had adequate capital, I'd probably own a part of Joe. You have to play with what you're working with. You have to work with what you have. You can't own everything. You have to make decisions. And it's okay not to own things. And say, okay. Hope that helps. No, Joe's hell of a protocol. This Avalanche has been lagging. I mean, what have you got so far? You got Solana, which was hot. You got all the airdrops on Cosmos hubs, and mainnet has been lagging as well. But that was 2024. Solana and airdrops on Cosmos hubs. That's it. That's the story of 2024. It's meme so far. You haven't had even the capital expansion yet, so it hasn't even started yet. Yeah, 91 on the move. Nothing's happening at 91 on the move. You gotta get to the butter zone. This is maybe it's not 2020. Because 2020 started to have the DeFi protocols and it just got weird. So there was a lot of appreciation for the businesses, which were called utility back then, or credit and foreign exchange as we call them nowadays. But I don't know, Uniswap was hot back, so it was like maybe early 2020. We could compare early 2024, maybe, maybe. Uh, Maybe 2024 thus far has really been akin to like activity in 2016 when you started to have the ICOs, and it was just literally just bullshit. And that's what almost all memes are. It's just bullshit. You create a token in 30 seconds, you throw some graphics on it. It's bullshit until it's not. And that's the complexity with memes, and that's why it's not an investment. It's just trading in a psychological fuckfest of who could get in and out at the right time. Drives you nuts. Anyhow, Konstantinos. Hi, Captain. My Captain, do you think there's an investable opportunity outside of crypto and where? Well, not according to my current definitions. I define, and I don't have the capital. I think businesses are good, but run a business. Open a pizza shop in a good location. It's a good business. Buy a pizza shop. There's businesses for sale all over the place. Real estate's dead. That's just going to be an absolute catastrophe. Who knows what they're going to do with commercial real estate? And I think just going to have more consolidation of banks, and the big banks are going to buy everything, and we'll see how they paper over that mess. But I don't think commercial real estate is investable. I mean, clearly this is not the case for veterans of the field that own or heavily invested. It's already operational businesses. But if you inspect like APR, because APR is APR is APR, Airbnb is just crowded trade and it's going to roll over hard. Um, so I don't think rentals. I just don't like that business. You're talking about like 5 to 12%, and that 12% is if you max the shit out of it with all the uh, commercial and corporate tax breaks and stuff like that. And I have no interest in working that hard. That's a lot of work to be a landlord. So no, there. Equity dividends are bullshit. That's just a scam. You are subservient to a board of white pasty dudes that make 30 mil a year. So no. What am I supposed to say? I just don't see it. With adequate capital, yes. And the big boys, you run around with, 7, 8, 9, 10 figures. You can make different decisions. So you can always respect the portfolio, and you can do different things with different quantities of capital. But I don't see anything that's interesting. I think this is by far the most interesting space from a business perspective. You can't own these businesses don't exist in traditional finance. Where can you know what it takes to open a small private credit? Like they do exist. They call you and they try and say your business is eligible for this line of credit. It's a private credit company. Or you could just literally click some shit and you're done and you buy it. So this is like takes accessibility to businesses that are typically not available to people in traditional finance and makes it instantly accessible and much more interesting because the space also appreciates, as we know it does, cyclically every couple of years. And to top it off, it's global. The credit that you access here, you can access it in any country in the face of the earth. You just need collateral. So this is a global private credit business. Global. There's nothing that's more interesting than these businesses. Simple as that. Snoke, much love. Sail Away, Deep Purple. Recommended song. Yes, I could use a good song. I got to go back to work soon. What do you think about these tweets? If you care more about the movement of altcoins, it doesn't mean you are high risk gunslinger, it means you are poor. If you built your life up correctly, you don't need it. I'm not fond of calling people poor. It's obviously quite argumentative and judgmental. Uh, if you build your life correctly, so that implies like time horizon. So if you're 20, do things right, and by the time you're 20, 32, by the time you're 32 in 12 years, 12-year cycles, it's gonna be fucking interesting, and you're good to go. So time is a critical thing. You don't need a 10 to 100x to make it. I mean, clearly that's true, but what does correctly mean? Correctly is an incredibly subjective term. It means you have a sustainable mentality, a sustainable set of rules, and over 4, 8, 12 years, adhering to those rules produces favorable economic results. So it's quite an argumentative statement, but um, I wouldn't say things like that nowadays. And I think there's better ways to say what he was trying to say, which is kind of what I just described. Follow your rules, define your rules, and invest wisely with prudence. Take your time. Less is more. Don't need to own everything. Cash flow, collateral, structure the business, write the rules. And in 12 years' time, if you're 20, when you're 32, you're good to go. If you're older, you got to be prepared for appropriate, reasonable, rational time horizons. Hope that helps. Is that a Death Star shirt? Yeah, I've worn this a couple of times on stream. It's a Death Star, but it's also Vader's head, and it's also Stormtroopers. Listen, they could claim all those terms they want about Disney and all, the conspiracy stuffs. I like those parks. They're quite enjoyable. I used to work at Universal Studios, and I would go on lunch breaks for quite some time because I was always so fast with my work, and the whole business unit was so slow AF. And I would just go into the park for like 2 hours at a time. I used to sit at that circle in front of Jimmy Fallon for like an hour, and then I would go over to where Jaws is hanging and just sit there for like a half an hour, maybe go on a ride every now and then. But I just used to sit in those. It's park. It's like a Central Park, but this is a park filled with bustling activity and people and all of this sounds and environment, and it's a curated, crafted environment. And I find that fascinating and I find that enjoyable. So I used to sit there for quite some time. So I'm quite a fan of those kinds of parks, and I like content like this. I don't subscribe to popular narratives and what folks talk about on social media. I define my own narratives. Personally, I don't follow narratives. I write my own. Bitcoin Bro, what do you think about DXY and the strength of the US dollar at the moment? So, big takeaways about dollar and cycles and what it all means. If move crashes to 60 and the DXY is at 104, I mean, obviously, if DXY spikes, it creates all sorts of distortions. But let's say the dollar stays stable. Let's say the DXY trends horizontally from here between 100 to 105 for the next into 2026, like January 2026, and move crashes to 60. You're going to get a disgusting bull market of epic proportions, especially if interest rates remain at like 4.5% or more. So the higher the interest rate and the more steady the DXY combined with a collapsing collateral volatility is going to produce a pretty much unprecedented bull market. So the DXY does not need to come down for an insane bull market to play out. Now, obviously, if the DXY comes down, let's zoom out to like, oh, dare we say a 6-month chart? I'm the only sick person that looks at 6-month charts. If you get a DXY crash back below 100, which probably requires some sort of U.S. government intervention. Um, it's what Vance has talked about, by the way, vice presidential pick, that a weaker dollar is the only way you recover the American manufacturing sector. Um, oh my God. If you get the DXY back under 100 and move rolls over to like 70, 70s and 80s, and basically here's the banana zone. Oh my God. And interest rates stay above 4.5%. Oh my God. Folks don't understand that interest rate shit. And they're like, oh, the Fed's got to cut. Oh, the Fed's got to print and money print to go burr and QE. No, that's irrelevant. Irrelevant. See, I don't subscribe to narratives. I write my own narratives. All that's bullshit. The Fed has to cut their rates. It'd be a bull market. Oh, the Fed's about to cut. Oh my God. So incredibly off base about the way the system works. You get a bigger bull market with 4.5% than you've ever seen. It's a big incentive. So for the last 15 years, post '08, when a banker lends money, think if you're a banker and you're the bank is low, so they're like, hey, don't lend much. We don't have much to lend. But then the balance sheet frees up and you got 100 mil. The bank has 100 mil. And the bank goes, all right, hey, bankers, here you go. Here's our packages. Here's your bonuses if you lend this money. Lend it. It's a product. They have to sell the product. So if the banker has a 0.25% interest rate, SERP, and the bank has 100 mil to lend, the banker's like, all right, I get 5 basis points or 10 basis points maybe if I sell this loan. And we're talking about 4.5%. So the bonuses will be 100 times larger in this environment with an elevated interest rate environment at 4.5%. More, it's over 100, a 0.25% compared to 4.5%. It's like, here's a 5% on a no 2%. Here's 2% on 100 mil. Here's 2 mil if you sell 100 mil. This is bankers. This is a business. It's a product. In the 4.5% environment, compared to here's what's 100 less? Here's 20 grand. Sell the 100 mil and we'll give you a 20 grand bonus. That's what it was like in the 2010s, and now it's like sell the 100 mil. Here's a 2 mil bonus. That's what an elevated interest rate does. It changes the incentive systems. It flips them upside down. Bankers are going to have so much incentive to sell the balance sheet or the balance sheet capacity that the banks scrounge up as bond volatility rolls over and balance sheets of banks around the world start to free up capacity. It's basically the way it works. Hope that helps. Alex Hormozzi. That's the thing about opportunity. It looks like risk when it's an opportunity, and by the time it's risk-free, it's not an opportunity anymore. True statement. That is much more reasonable than earlier quotes. That's a good quote. And I like the word appreciation, so it's up to us to appreciate something before other people appreciate it, because once it gets appreciated by other people, the price point appreciates. Kind of makes sense. That's right. Now, bear in mind when it's risk-free, then it's sit back and relax mode. Because if Bitcoin rips to 250, 300, and then it crashes to a horrible 150 because the volatility is going down, as Bitcoin maximalists talk about, as it gets monetized, the volatility will drop. Now it's a very useful risk-free asset that now has appreciated for you. You could use it as a collateral, and by the time it becomes risk-free, frankly, there's still opportunity because it's such an incredibly useful balance sheet component that allows you to access CELOCs, crypto equity lines of credit. So that facilitates business operations. You see, lines of credit are so extraordinarily integral to the business operations? Here, let me explain why. Often, let's say you're a pizza shop. Oh, let's go out and tell a story about something we've never talked about. You're a pizza shop and you need to buy flour and you need to pay your employees, but you don't do accounting for 2 weeks. So let's just say, maybe it's a bad example, but let's just say. So you need a line of credit because you have to pay your people. You have to pay the flour, you have to pay your supplies, or better, the vendor. The vendor. Okay, this is the correct example. So the vendors, food vendors, they often offer terms, net 30, net 60, net 90, payment terms. Why? Because if I'm a vendor and I give a pizza shop flour and vegetables to make salads and pastas, the pizza shop has to sell it all before they could pay the vendor. They have to actually make the money from the sale of the product before they actually pay for the product that they had. So that's why a line of credit is critical. Now with the line of credit, they could just pay up front for better terms instead of, net 90 maybe carries an interest rate, or net 90 is less favorable compared to net 30, or pay right away and you get a discount. You get a 10% discount if you pay your bill right away. So you have a line of credit for your business and you're able to pay the vendor right away and you get better terms. So that's why lines of credit are absolutely critical. And it's also critical for the vendor because if you're not going to get paid for 90 days, you probably need some working capital to buy more inventory to vend to the pizza shop. Hope that helps. Everything outside of crypto is not an opportunity. It's, at minimum, it's just not interesting, or it's not the most interesting opportunity. It's just a boring opportunity, comparatively speaking. It's literally FX, credit, and derivatives. You can't do this in traditional finance. You can't own a bank. You can't. All of us, the little people, are not opening up a private credit business. We don't have, unless maybe have 50 mil. Boy, if you're lending at 5%, 50 mil, is that a really good business? You're lending a bill at 3%, 4%, 5% private credit. All right, then again, private credit is probably like 10, 15%. I guess they call that like hard money in real estate nomenclature. And you could lend at 10, 15%. That's a decent business, maybe 50 mil capitalization, making 5 mil a year. You have 10 employees. And maybe as CEO, you're taking on a half a mil a year. So you have a 50 mil capitalization, you have 50 mil to start a business, and a CEO, you're taking home a half a mil a year. Maybe that's not a good business. Is that an interesting salary for someone that has 50 mil in the bank? I don't know. But that's why this is a whole nother level because you could buy these businesses and you could get this cash flow and you could get not 10%, you get 20, 30, 40, 50, 60, 70, 80% depending on what you do. You can't do anything like this in traditional finance. Max profit, happy day, love the grind, bro. Yeah, I'm just doing what I do. And now I talk to you. I talk to you guys about what I do. It helps me pass the time. Snoke, a pleasure. Brian, all the showing being what they are, lightsaber battles are still always enjoyable to watch. Yeah, that shit's crazy. I am the anti-hater. It's not not fond of necessarily B-rated movies because it comes down to acting and there's a degree of production quality. But man, I tend to like things more than I dislike things. It's not like I dislike things because it's like I always appreciate it from the production standpoint because I know even like a B-rated movie is hard to make. But what's the point of hating things? Life's a very interesting experience. Might as well enjoy things best you can. Kill us. Happy Friday. Crypto Tube. How many multiples do you expect on income from this point? That is the kicker. My expectation is weird. It's gonna be freaking weird because multiples on income aren't multiples on price point necessarily, but obviously if curve goes 10x on the money, um, I mean, if income from curve goes 10x on the money, price point's going to do some weird shit. So there's a relationship, but the kicker is it's about consumption. And my general expectation is over 4, 8, 12 years, heading into like 2032, 2036, consumption of credit. Credit is the most desired product on the planet. That is, if you talk about products like products in a Target, products at a Best Buy, products at a Walmart, credit is the product that is wanted by all of them, and every person and every government on this fucking planet. It is the most in-demand product in existence. It's gonna get weird. It's so weird. I mean, come on, how is a 10x on revenue not even a boring, reasonable statement? How? Over 8 years? What it's going to be like 8 years from now? I think a 10x in revenue is probably short. So you're going to have your blow offs and tops, and you're going to have your bubble, and that's all part of this game. Let's say the way my mindset is something like this. Let's say 30x in revenue at the top, and it's just like disgusting. And then it all absolutely implodes and some sort of financial crisis happens. So I like to think in terms of the bear market bottom, not the bullshit top, because that's bullshit. Where's the bottom? If the bear market bottom is 2, 3, 4, 5x from here, that's probably what I'm thinking. Blows off 30x, crashes to 2, 3, 4, 5x. Sounds like the bubble. Sounds like Bitcoin going to 300K and crashing horribly to 80K. Oh, the horror. That'd be so horrible. The frankly, I don't think it crashed to 80K. It might crash a little bit more. Like historically speaking, it'll crash to like. Let's take a look at the chart. Historically speaking, Bitcoin would crash to. Look, in the 6 month, it'll crash to a time-weighted average price. So 26, maybe the TWAP's around here in the 40s and 50s. But that'd be like some sort of crazy wick or something, maybe. I don't know. Look where we are relative to the previous highs. It crashed to basically the previous highs. It was 19 and change on the monthly, and it crashed to 15. So proportionally speaking, that's something like maybe it runs really high. Is this log? Let's put on log. 250, and then it crashes to 55. That would actually be a significant reduction in the Bitcoin crash volatility. What's that, a 70 something percent, 80% crash? That looks about right as well. Crashes to some just a little bit below, just a little bit below, just a little bit below. So that's why it's I don't know, that's interesting, right? So and then it just starts over again, and then they stabilize the system. At some point, social civility is financed, and that's where we're heading. It's just gonna get so freaking weird. It's already getting weird. We literally just had Y2K today. The Y2K bug happened today. It's weird. And president dropping out. That's weird. It's gonna be so weird. Okay. How much could I say weird? Killers B-rated horror movies are the best. Yes, they are. Yeah. There's so much great content out there. And it doesn't need to be Appreciate everything. And look what happens when you appreciate stuff that other people don't appreciate. Sounds like a very healthy mentality for investing. When you appreciate stuff that other people don't appreciate, that's where opportunity is. It's a much more healthier mindset. Ladies and gentlemen of the crypto space, Friday, July 19th, 12:41 p.m. 251 people made it to the end of the stream today. Congratulations to you all. We are all a little bit more rational. Tell everyone to subscribe, please. Jump on Discord. Say hello to our private community of the most rational people in the entire crypto space. I wish you all a good weekend. Enjoy, stay rational, and I will see you again next week. Peace.